Hey guys, MCQ Quickie. Come, let's go ahead and read out the problem. Navi & Co pays 8 per unit royalty to the designer of a product which it manufactures and sells. The royalty charge would be classified in the company's accounts as, and the options are direct expense, indirect expense, production overhead, and selling overhead. See, in this problem, Navi & Co pays 8 per unit. That is the key. It is paying 8 per unit as royalty because every unit it produces, the royalty has to be paid. If it produces 10 units, 80 rupees is the royalty that has to be paid. If it produces 20 units, 160 rupees is the royalty that has to be paid. So this is the key here. So with this key, let's go ahead and analyze the options and finalize the answer. Direct expense. You know well that direct expense is the expense which is directly related to production. So here the royalty, the more you produce, the more royalty you pay. The less you produce, the less royalty you pay. So obviously the royalty is directly related to the production. So this could be classified as direct expense, but let's not jump into the conclusion. Let's have this as a preliminary answer. Let's go ahead and analyze the other options also before finalizing the solution. The next one is indirect expense. You know well that the indirect expenses are the expenses which are indirectly related to the production, which are indirectly relating to the manufacturing activity, like rents, electricity. So all these expenses are indirect expenses which doesn't have anything to do with this problem because the royalty, this is directly related to the production. So obviously indirect expenses cannot be the answer. The third one is production overhead. You know very well that the production overheads are machinery rent, factory supervisor salary, and all the expenses whatever that are happening on the floor, that could be considered as the production overhead. Here the royalty is directly related to the production. It doesn't have anything to do with the production overhead. So this too cannot be the answer. And the last option is selling overhead. You know well that the selling overhead is nothing but the overheads incurred during the selling of the product. Here the royalty is paid directly related to the manufacturing of the product. So obviously the selling doesn't have any picture at all in this problem. So finally the preliminary answer what we have finalized could be the final one, direct expense. This is the answer for this question. Hope you guys are pretty clear.